All right, so hello everybody. It's 10:19 p.m. on Sunday evening. We are a few hours away from market open, and so I decided just to do a quick review of what I am looking at in gold, and so so we are going to look at it in this sense. Just give me a second. Okay, so all right. Okay, I had not seen this. I've just seen it. So tomorrow, or rather on Monday, we are going to have a bank holiday in the US. So this what I've seen with the past bank holidays on weekend bank holidays in the US is that we have little to no activity during New York session. So maybe we are going to see some activity in Asia and London. So we wait to see. But basically what I like looking at in terms of the economic calendar, I like looking at the red folder events that are going to happen in the new week. So we have something happening on Tuesday at 5 p.m. Kenyan time. So remember, all these times are in Kenyan time, Nairobi. So Wednesday we have news again at 5. Then Thursday we have news at 3:15. So this is the NFP week. You can see on Friday. So we have this news. Where is it? We have ADP non-farm employment change coming out on Thursday. Normally it comes out on Wednesday. I don't know why it's coming out on Thursday, but it's okay. And then we have PMI on the same Thursday, and then on Friday is when we will have our NFP. So it's always important that we pay attention and know exactly when news is coming out. According to my trading plan, the way I trade news, if I'm in a trade and it has gone past a safe place that I can move my stop to, I'll move my stop to that place and then let the news play. Or if I feel like it has not moved that much and I'm not really sure, if it has not moved that much, I can collapse the trade. I normally collapse the trade and then re-enter after the news has done its thing. So I don't chase news. I like trading markets that just move nicely, nicely. Okay, good. So that is that. So that aside, let us quickly look at the market and then just ask ourselves what we are likely to be getting. So remember, we have just closed September. We have just closed, not September. We have just opened September. The month before September is August. So we've just closed August, and this is how our monthly candle has closed. It has closed nicely above the high for the previous month, above July's high. So we've closed nicely, and you can see the market dropped very, very nicely into the range of this July's candle, and we even retested the high, June's high. And so we have what we call an immediate reimbalance here. This is an immediate reimbalance, and so the market has since closed higher than it opened, and actually closed higher than the close of July. So according to seasonal tendency, this low is very significant, and now the market has moved up. So we'll wait to see if this market opens and continues higher. However, looking at this level here, let's just see what price is that. So you will see when we go to lower time frame, you will see the significance of this number, 2480, 2482. So we have something happening here on lower time frame. So we are maybe expecting the market to do a retest and then we bounce up. So pay attention to this, at least for the first week of this for the first week of the new month that we've just started today. Pay attention to see what happens here. If we get a bounce from this side, then targeting this high and even higher is possible. Remember, eyes are still on 2550. highs are still on 25.50. So that is what I wanted to show you on the monthly time frame. On the weekly time frame, we just come here to see how the week closed. Again, you can see this weekly candle, it is an inside bar. What is an inside bar? An inside bar is when we get the high, the low, the open and the close inside the range of the previous candle. So that is what we've had, and so this just reading it as is, it indicates a possibility of a continuation to the upside. It is a candlestick pattern that that actually some people trade. I used to trade it and I still trade it. I use it just as one of those many things that I look at in my trade. So this is an inside bar, so a possibility of the market trading higher. That's very, very possible. And then we are not going to look at okay, we have this fair value gap down here. So this fair value gap has a possibility. There's a possibility of the market coming back to fill this fair value gap, maybe sometime in the future, or maybe even in the new week. Not really new week. This is a weekly time frame. So there's a possibility of the market coming back to fill this gap, maybe the course of the month or the next month. But we'll just trade them. We'll just trade the candles as they print, and then we'll look at the other things that we look at. Then coming down to daily, on the daily time frame, what are we seeing? So I start paying attention here, a lot of attention at this point. Remember, this is the high that we are looking at, the monthly high that you're looking at, the market possibility of the market coming back to retest this. You see, we already retested here, but nothing stops the market from coming back to this level one more time. So we will pay attention and see if that happens. So you can see the 1, 2, 3, 4, 5. These are the 5 candles that printed last week. So these 5 candles, 1, 2, 3, 4, 5. These 5 candles, this is where the high of the range is here and the low of the range is here. So it is on Wednesday that formed the high and the low of the week, and then we have just been consolidating. So we have our opening, our weekly open. So price has just been playing around this area. So we want to see what will happen, because as you can clearly see here, we closed lower than Thursday's open. Friday's close was lower than Thursday's open, and so there is that possibility of the market actually trading lower and coming and targeting and coming to test this zone, maybe Monday, Tuesday. So we will check if 2480, 2482 is a possibility for Monday, Tuesday. And then once this one happens, as you will see in the lower time frame, once this one happens, then you can almost see that we have relative equal highs. What rests above relative equal highs is liquidity, and then you also have liquidity above this swing point. So the liquidity that is here, the liquidity that is here are both attractive to price. They are both attractive to price. So price can draw either take this one out and then target this. So if we come here and bounce, or if we come here and even trade low and take this, it will still be okay. And then we can now start looking at this relative equal highs and maybe even this swing high. And you can see this swing high, it rests very, very closely to 25.50 level that we've been calling, because this is 25.31, and just 20 pips above it we have 25.50. So remember, the market can sweep 20 to 40 pips above, or even go get a bit animated. So we will be looking to see if this will be a possible target for the week. So should we continue up, 25.50 is our target, and then we are careful to see how the market will react to this level down here, this 24.80 level. Then we move on to the to H4. There isn't much that we're going to talk about here, but you can almost see that we had consolidation. This is Monday. So from Monday all the way to Friday, we were just consolidating around this level. You see, just around this level. So the high on Wednesday, the low on Wednesday, and then we continue with the consolidation. So we have the relative equal highs being shown there nicely, and then maybe we can draw out this order block. This order block, we can just draw it out, and then you can see how price was playing around the midpoint You see how price was doing, what price was doing there. And then if we take this high to this low, or better still, what can we do? Where is Monday? Monday was here. So if you take from Monday to Friday, the whole of this block, I'm going to mark it in a different way. The whole of this block, the whole of that block. Then let me just change something. The whole of this block, it actually looks, this is a consolidation. It does not look like it's a consolidation. So what are we expecting? We're expecting the market to pull back up and maybe come and retest this candle. Okay, then once you've retested that candle, we drop and then take out these lows. Okay, so this is what I'm thinking. I'm seeing a possibility of the market trading up, and then we trade down and take out those lows, and maybe if we get a bit animated, we can even take this swing low. Okay, then once, but this is not a must, because the theory is we can come and get this. In fact, if this holds, it will actually be a nicer, actually it should hold. I think this should hold for what I'm about to say to play nicely. So this is yet another order block. So maybe we come from that, and then we come and retest this order block, and then after that we continue higher and take out that high and target our 25.50. So why am I looking at this exactly as I've just highlighted? So this is an order block. This is yet another order block. Then I'll change its color slightly. I'll change it to gray. So a bounce here will be nice because it will give us that, and you can see this is about 2487 level, 2487 level, and the market can actually come into the midpoint of this candle, which is 2480. The midpoint of this order block, which is 2480. So the market can do that deep, and if the market decides that yes, there is still liquidity down here that I'd like to get to, it can come take out this liquidity and even come to this order block. There is still a lot of opportunities for it to drop. So the market can actually drop to this level here, or the midpoint, or take out the low and then move up, or continue lower and even take out this low. So what does that mean? That this serves as a warning for those who are looking to buy once the market has dropped. Let us wait for a confirmation, a clear confirmation that indeed the market has started. It's moved to the upside for us to catch it. Gold has a habit of shaking out people and faking guys out. So it can come here and then bounce and then now trade again lower. So be very, very careful with this metal once it hits these levels, and only trade confirmed entries. Then from this point we are going to H1, and H1 I'm not going to show you on this chart. I will move to the next chart, which I've already marked on H1. This is a different broker, but it is still the same. So this is what we are looking at, and we have the external range liquidity pool up there, internal range daily fair value gap. So that's why we've been looking at 2480 as a possible bouncing point for price on the this is now H1. So 2480 looks like a very, very nice place for price to bounce from. Why? Because yes, it is part of, we have this order block, draw out its 50%, it's exactly at that point. And then here I applied Elliott wave principle. So this is the extensions. This is 1, 2, this is 3, this looks like a 4 playing out, and then we'll have a 5 finishing off our move to the downside. And then again, this is accumulation. I will treat this as manipulation, and then we get our distribution to the upside. So that is why I'm looking at it that way. And now, considering that we are likely to be having we are having news on Monday, then there's a possibility maybe we'll just come to this point and then chill, and then maybe get this move on Tuesday. Not very sure, but we'll see what the market will do. But basically that is what I'm looking at, and so I'm waiting for the market to open, and then we see what happens. So in case there is something that happens that is worth highlighting, I will give an update. For now, For now, I think we leave it there. Wishing you the best in the markets. Remember to observe risk management, and let's go and win in these markets. Thank you. Thank you.